Hello, and welcome to the Professional Services Industry Podcast. I am J.C. Tuthill, Managing Director with Cherry Bekaert and its Forensic and Dispute Advisory Services team. Today, we will be addressing the importance of business interruption insurance coverage, how it works, and whether your business has adequate business interruption coverage and the process that should be followed in the event of a loss. I'm joined by Lori Smith, partner in the FDAS practice, and John Collier, managing director. Lori and John are both CPAs with combined experience in the forensic field of over 50 years, during which time they have assisted over 1,000 clients in calculating business interruption losses. So let me begin by welcoming Lori and John.
Glad to be with you, JC.
Thanks for having us.
John, if you would take a moment and share with our listeners the most significant business interruption issue facing businesses resulting from natural disasters and other casualty losses like hurricanes.
JC, as you know, business interruption insurance is extremely complicated, and therefore business leaders often misunderstand it. Among the most significant issues are either the lack of business interruption coverage or inadequate business interruption coverage that can result in a company going out of business because they're underinsured and are significantly impaired financially. We therefore recommend that business leaders understand how business interruption coverage works.
Lori, can you share with our listeners how business interruption insurance defines what insurance companies will pay claimants for their lost profits associated with a covered event?
JC, typical business interruption policies state that the insurance company will pay for the actual loss of business income that the business sustains due to the necessary suspension of its operations during the period of restoration. It's also important to understand that business interruption insurance coverage is part of a business's property insurance policy and is not triggered until there's what is called a covered cause of loss. That is, it's a suspension of business operations that is caused by direct physical loss of or damage to the property at the premise described in the insurance policy of the business where the suspension occurred. This means that before a business can claim a business interruption loss, it must have experienced an insured loss, such as damage to the insured property under its insurance policy. If there's no claim for property damage or another provision of the policy that provides coverage, the business interruption coverage does not kick in.
John, how can business leaders understand the business interruption insurance coverage that they have in place?
Well, the first place they should look is the declaration page. It's generally in the front of an insurance policy. Here they'll find a summary of the business insurance coverage, including the types and dollar limits of the coverages. You'll also find the amounts of deductibles and waiting periods that may apply before the business interruption loss calculation can begin. Other important coverages and limitations that you may find on the declaration page include whether there is a co-insurance clause, which could limit the amount of a claim if the property covered under the policy is underinsured.
Lori, who calculates the claimant's business interruption loss?
The insurance company will typically hire a forensic accounting firm to calculate a claim. Be sure to keep in mind that the insurance company's forensic accounting firm does not represent you as the insured. Therefore, you should hire your own forensic accountant with experience in calculating business interruption losses to represent your interest and calculate your loss independently of the insurance company's forensic accountant. This process should begin prior to the insurance company forensic accountants begin their work to ensure that all the facts and circumstances are identified to provide you with the maximum coverage offered within the insurance policy, and that all the attributable losses are considered in calculation of the claim. You should collaborate closely with your own forensic accountant to ensure that both of you are aware of all the applicable provisions of the relevant insurance policy or policies, and the facts in support of it to maximize the amount of the claim under the terms of the applicable policy. An important coverage that you may have is claims data coverage, which pays for the cost of your forensic accountants to compile your claim. Not all policies offer this coverage, and where possible, it should be negotiated up front by your insurance agent before your policy is issued. Where claims data coverage is not available, your forensic accountant may seek and recover certain forensic accounting fees as part of what is known as extra expense coverage.
John, can you explain what types of losses are generally covered by a business interruption insurance policy?
Sure, JC. Lost profits are the types of coverage, the types of losses that are typically covered. And lost profits are often defined in business interruption policies as the net profit or loss before income taxes that would have been earned but for the impact of the insured event, plus continuing normal operating expenses, including or excluding ordinary payroll, depending on whether ordinary payroll is provided for in your policy. These lost profits should not include revenues that would likely have been earned as a result of an increase in the volume of business due to favorable business conditions caused by the impact of the covered cause of loss. There's also another way that insurance companies calculate lost profits. This second method entails calculating the amount of lost profits as lost revenues during the period of loss minus the non-recurring expenses, i.e., saved expenses, that do not necessarily continue during the period of loss.
So, John, do these two methods result in the same amount of lost profits?
If done properly, they should be the same, yes.
John, you mentioned ordinary payroll earlier. Can you please explain what ordinary payroll coverage is and how it can impact the amount of a claim?
Sure. Yeah, ordinary payroll means payroll expenses for employees except officers, executives, department managers, and contract employees. The reason ordinary payroll coverage is important is because it'll pay the cost of employees that are not officers, executives, or department managers and contract employees if you want to keep them employed and paid during the period of loss.
Lori, how does the insurance company determine the period of loss during which they will calculate the amount of the claimant's lost profits?
JC, John mentioned the policy declaration page earlier, and the period of loss is often stated in that deck page. And it's based upon the policy provisions that were agreed upon between the business insurance agent and the insurance company at the time the policy was issued. It's typically comprised of two periods: the initial period of restoration and an extended period of indemnity. The initial period of restoration is often limited to a 12-month period that extends from the date of the physical loss or damage until the date that the damaged property is restored, or a limited number of months allowed by the policy, whichever occurs first. The extended period of indemnity is often defined in the insurance policy and follows the initial period of restoration for an additional number of days allowed by the policy. It's often limited to a number of consecutive days like 60, 90, 180 days, and so forth. The purpose of this extended period of indemnity is to allow the business to return to its level of operations as it was prior to the event. That is, it gets its doors open and ramps up its business operations.
John, now in addition to lost profits, insurance companies will pay what they refer to as extra expense. Can you please explain how this coverage works?
Yes. Most business interruption policies will reimburse the claimant for what is defined as extra expenses. These are the expenses that the claimant incurred that were necessary to avoid or minimize the suspension of business during the period of restoration. These are expenses that would not have otherwise been incurred had there been no loss at the described premises or temporary replacement premises. Examples of extra expenses are things like generators to keep the power on at the premises and other expenses to keep the business running and mitigate the amount of the loss.
Lori, what happens if there's no damage to property at the insured premises and thus coverage is not triggered, but the business cannot resume operations because of, say, an official governmental action of civil authority that prevents the business from returning to its insured premises and reopening?
JC, this is an area that we know well because of our offices that were in downtown New Orleans during Hurricane Katrina. As many of our listeners may remember, the city of New Orleans flooded because of Katrina, and the government declared a state of emergency and issued an action of civil authority, which prevented access by businesses to their described premises. In cases like this, many insurance policies provide civil authority coverage for a certain period, like 30 consecutive days.
John, do business interruption insurance policies cover lost profits due to utility failures?
In some cases, they do, where coverages may apply to either on or off premises power failures. These are very technical and tricky coverages, though, so it's important that they be carefully explored and defined within your policy to avoid coverage issues after a loss.
Lori, can you explain what dependent property coverage is?
Yes, this is where a business sustains lost profits because of another property being damaged. An example of this is where a doctor's office or clinic incurs lost profits because of a hospital where their doctors operate is closed due to a casualty. This is especially important coverage that is often overlooked by businesses and their agents, and as a result, they incur uninsured losses.
John, let's talk for a moment about insurance policies in general. They seem to be extremely complicated, and as a result, they are often not clear-cut. How do you deal with that?
Yes, JC, insurance policies are extremely complicated and technical. And it's especially important that when reading them, you make sure that you read the defined terms and have the entire policy available to you, including all endorsements, riders, and exclusions. These are legally binding changes to an existing insurance policy that can add, modify, or exclude coverage. Therefore, you need to make sure that you identify these areas and read them carefully, as the coverage that you think you have in the policy may not be the coverage you have when considering those riders, endorsements, and exclusions. Insurance policy exclusions specify which events or risks are not covered by a policy. They're a standard part of an insurance contract and can vary by policy and carrier.
John, so what advice do you have for our listeners when one has a business interruption, whether it's from a fire, hurricane, tornado, or earthquake?
Well, as you know, JC, we advise our clients to first take a proactive approach in working with your insurance agent and forensic accountants to understand your insurance needs and seek the best possible coverage before a loss occurs. When a loss occurs, immediately report it to your insurance agent. They'll report it to your insurance company on your behalf. Then you need to mitigate your losses. Try to reduce the amount of loss to the extent possible. Engage forensic accountants to immediately begin assessing and calculating your claim and authorize them to work with your insurance adjuster and the insurance company's forensic accountants. You need to cooperate with the insurance company adjuster in providing necessary information for your claim in coordination with your forensic accountants. But before answering questions of the insurance company, be careful that you understand the implications of your answers so they'll be accurate and consistent with your insurance coverage. If in doubt, seek the advice of your agent, forensic accountants, and attorney. Finally, file a proof of loss with the assistance of your agent, forensic accountants, and attorney as necessary.
Thank you, John. So this concludes our episode. Thank you, Lori and John, for joining us, and thank you all for listening. If you have any questions about this episode, please feel free to reach out to us on our website, cbh.com.